The storm desk. Read the storm. Book the roofs. A hurricane crossed the coast, and your homeowner has two policies on the same house. Wind on one, flood on the other. So they walk you to the roof, grinning, because two policies has to mean two checks, right? It almost never does. Insurance pays you back to where you were, not twice for the same shingle. By the end of this, you'll know how more than one policy behaves on one roof, which file owns which damage, and where your job stops. Start with the one rule that governs all of it. Indemnity, which means a policy puts you back where you were before the loss and stops. Your combined recovery from every policy cannot beat your actual loss. Two clauses make sure. An other insurance clause, which decides which policy pays when both cover the loss. And an anti-stacking clause, which blocks collecting the same dollar twice. When two policies overlap, they split the bill or take turns. The roof gets fixed once, and the money is capped at what it was worth. So where do multiple policies actually add up? Not on one nail, on different perils. A peril is the cause of the damage. Each policy covers a different slice of the same storm. Wind rides the wind policy. Water rising from the ground rides the flood policy. The interior contents ride the homeowner's policy. Each slice pays once, and nothing falls through the crack between them. That's the whole game, not stacking money, sorting which file owes which piece of the loss. The most common version is wind plus flood, and they are two claims, not one. Standard homeowners and windstorm policies exclude flood, so flood is almost always its own separate policy, usually through FEMA's National Flood Insurance Program. Two files, two adjusters, two deadlines. The homeowner thinks the hurricane damaged the house. Insurance thinks two different claims share an address and a date. For the roof itself, it's almost always a wind or hail question, because floodwater rarely climbs to a sloped roof. The flood claim shows up downstairs. Here's why you keep those two files surgically apart. Many wind policies carry an anti-concurrent causation clause. It says when a covered peril and an excluded peril combine to cause damage, the whole loss is excluded. So if a carrier can argue flood mixed in alongside wind, that clause can pull the portion out of coverage. The sloppier your documentation, the more room they have to tangle the two. Photograph the roof as a roof, the wind damage described as wind, and keep the floodwater in its own folder downstairs. You're not arguing coverage. You're just making the wind damage look like what it is. Now the deductible trap on a separate windstorm policy. In many coastal counties, wind and hail are carved out and written on their own, like the Texas Windstorm Insurance Association. A standard deductible is a flat dollar figure. A wind deductible is usually a percentage of the home's insured value, commonly 1 to 5%, as high as 10 in some coastal zones. On a $400,000 home, a 2% wind deductible is $8,000 before a single shingle is paid. 5% is $20,000. A $14,000 roof can sit entirely inside it. Covered claim, zero payout. That number reshapes the whole job. The contractor who promised insurance will cover it looks like a liar, even when the policy is doing exactly what it says. Deductible math isn't your job. That belongs to the agent. Your value is an honest, specific scope, so the homeowner can weigh the real repair cost against the real deductible. So tell them, plainly, get your wind deductible from your agent before either of us assumes the policy pays. A roof that costs less than the deductible is one the homeowner pays for. Saying so up front builds more trust than a vague promise. Condo roofs are their own multi-policy maze. The roof is usually a common element, so the association's master policy repairs it, funded by everyone's dues. Each owner carries an individual HO6 unit policy for the inside. Read the bylaws. They decide the line, not your gut. And there's a third pocket. A big master deductible can be assessed to every owner, and loss assessment coverage on the HO6 helps pay it. So the early question that saves you weeks: who authorizes this work? The board or property manager? Almost never the resident at the door. Then there's layered coverage. A primary policy, an excess policy, sometimes an umbrella. Common on commercial buildings, large multifamily, and high-value homes. Layering does not multiply the payout. It sets an order. The primary pays first. The excess only pays after the primary limit is exhausted. When two policies each claim to be excess to the other, courts often force them to share pro rata. A commercial roof can also add the landlord's building coverage, the tenant's improvements, and a business interruption line. None of those disputes are yours to settle. They're flags you document and hand off. Sometimes it feels like multiple policies, and it's only one. The first check comes in smaller than your estimate, and everyone reaches for a conspiracy. The real answer is structure. Most replacement cost policies pay a roof in 2 stages. First, actual cash value, the depreciated value of the roof minus the deductible. After the work is invoiced, they release the recoverable depreciation, up to replacement cost value. The federal regulators, example, 2 families, identical $15,000 damage. The replacement cost family nets $14,000. The actual cash value only family nets $4,000. That gap is not a denial, it's the policy doing what it promised. And the mortgage company on the check feels like a second payer and isn't. When a lender is named on the policy, the claim check is usually made out to both the homeowner and the lender, because the home is their collateral. The lender adds no money. It controls release of the funds, often in stages as the work gets inspected, so your cash flow can lag the schedule. Plan production around that release, not on the assumption the money is already in the account. Track the contract, each carrier check, and the depreciation release as separate ledger lines. The estimate is not the project ledger. Here's the line, and with 2 policies in play, the pool to cross it doubles. You document conditions, write an accurate scope, and build the work safely. You do not interpret coverage, negotiate the claim, or promise which policy pays. The insurer decides coverage. The homeowner owns the claim, and the deductible is theirs. The Texas Department of Insurance is explicit. A roofer doing the work cannot also act as a public adjuster on that same claim. So don't have the homeowner sign their check over, and don't waive a deductible where the law forbids it. Document, don't diagnose. That's the whole rule. So run the file, like an operator who knows 2 claims are moving at once. Intake first. Every policy the loss was reported to, each carrier, each claim number, 1 consistent date of loss. Then the authority map in writing. Owner, board, tenant, manager, lender, adjuster. Then separate the causes. Wind, flood, fire, where, each in its own labeled folder. That single step is the most valuable thing you do because 2 files means 2 of everything. And watch the deadlines. Flood and code compliance coverage carry their own forms and clocks. 1 missed deadline can sink a whole claim. The cleanest multi-policy file starts before the storm, and that's where RoofPredict fits. It pairs an estimated roof age range with storm physics modeled per individual home, flagging which roofs are old enough that a real wind loss would clear that percentage deductible. So you spend the day on roofs genuinely due, not 3-year-old roofs where the deductible eats the whole claim. It also keeps your inspection photos, estimate versions, and closeout records in 1 file. It does not inspect the roof, diagnose damage, or decide coverage. Roof age is a range, not a date. The list starts the route. The inspection earns the sale. Close the loop. 2 policies almost never means 2 checks. Indemnity caps the total at your actual loss. Multiple policies only add up when each one covers a different peril. So the job is sorting which file owes which piece, not stacking money. Keep wind and flood surgically separate. Find the percentage deductible before you promise anything. Document the roof factually, and hand every coverage question to the people licensed to answer it. You write the estimate. The insurer decides coverage. The homeowner owns the claim.